Hey everyone, in this video I was going to compare two prime pandemic beneficiaries and answer which one is the better growth stock to buy, Roku or Zoom video communications. To answer this question, I'm going to look at revenue, valuation, profitability, and more. Let's get right into it, starting with revenue. And you could see here the big jump for Zoom video communication in 2020 as everyone started working, learning, and communicating from home. Revenue exploded all the way up to 4.464 billion. Impressively, Zoom Video has maintained this elevated revenue. It hasn't came back down sharply even as economies reopened and people returned to working in person and learning in person. Roku is a similar story, although not as obvious of a beneficiary from the pandemic. Still, you can see a nice upward climb after 2020 and Roku's revenue at 3.217 billion in the most recent year. The next thing I wanted to look at is operating profitability for the trailing 12 months, and this was sharply down following the economic reopening, even while revenue remained elevated. So as people returned to work and as people spent less time at home consuming video content, these two companies experienced a decrease in consumer demand. So to maintain that revenue level, Roku and Zoom worked harder, offered more incentives to maintain that revenue. Before, during the pandemic, they didn't even hardly have to try to generate sales. Their products were just rolling off the shelves with almost no effort. Nowadays, they're having to work much harder. They're having to increase sales staff. In Roku's case, they did not increase prices on their player units as inflation started soaring. Roku said, you know what, we're not going to raise prices. We're going to absorb those higher costs so that we can maintain our revenue, maintain our sales. And you can see that in their profitability jumping after 2020 and then coming right back down after the economic reopening. Zoom has experienced a turnaround and its operating income looks like it's increasing again and it's still positive. Roku, meanwhile, has not experienced that upward tick. It's flatlining, and just today, the company announced it's cutting another 10% of its workforce following two previous job cuts where it cut 200 people and 200 people, and today it announced it's going to cut another 10% of its workforce, trying to control these costs and return or at least stabilize decreasing operating income here, negative 735 million in the most recent update. So the next thing I wanted to look at is free cash flow, because a lot of times growth companies will use stock-based compensation, which can make it so that they have positive free cash flow even though they're negative profitability. And looking at this metric, Zoom is still doing very well, generated 1.1 billion in free cash flow in its most recent update. Roku negative 166 million, but it looks like at least this part of its business is upturning, turning back around, heading in the right direction. Finally, I wanted to compare these two on valuation. Zoom trading at a forward price to sales of 4.7, Roku at a forward price to sales of 3.1. So given the better performance of Zoom Video on several metrics that we looked at, and given that it's more expensive, I'm going to say that I'm willing to pay that premium valuation to buy Zoom Video stock. I like that the company has turned it around in terms of operating profitability, improving again. I like that it's positive free cash flow, and I like that millions of people learned how to use its telecommunication software, making it easier to adopt, customer adoption being a big key to gaining new customers. So for all those reasons, I would pick Zoom Video Communications as the better growth stock to buy. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.